All right, everybody, get started. I'm so glad everybody can join me. Today, we're going to jump right into homeownership, pre-planning, and much, much more. I am about to open up to the, just a second, that are hanging on in the live stream. So I'm going to bring them on YouTube and on Facebook. And thank you all so much for joining us here on homeownership, pre-planning. I don't know how many of you have visited with us before, but I'm telling you, you're going to find it beneficial. And if we are discussing a subject matter that doesn't directly relate to your interests, you can always put a question in the chat. If you are in the Zoom with us, you can place a question in the comments if you are on one of the additional integrated online sites. And we will take a look at that comment. If you don't pick it up during the, not, if we're in the chat, if you're in the Zoom with us, we'll see it immediately. If you're on one of the external online integrated platforms, we may or may not see it immediately. If we don't see it immediately, we will definitely pick it up in the next program, or we'll reach out to you directly to address what it is that you're concerned with. So personally, let me introduce myself. I'm Jacqueline Battle. And my entire purpose for doing this is to ensure that the knowledge and the information and the benefits that I've been afforded, that I can pass them on to others. A little bit about myself. Some of my best clients say that the thing that they really enjoy about the benefits that I've provided over the years with, in terms of information, in terms of different licensings that I have. For instance, I'm a licensed title insurance agent. Okay, so over the years, I've helped people to insure their title to protect their property, their land, their real estate against claims that come up from people who come in the future try to create problems for them in terms of their ownership, their vested interest, and they'll find stuff that's in the past that maybe has not been insured or that they think is uninsurable to try to use as a claim to, for lack of a better term, swindle people out of their vested interest in their property ownership. Well, as a licensed title insurance agent and having a vested interest in a title insurance agency, I help people protect against that. It happens a lot with their property that's been sitting. You're living in a different state and you own property that's in another state, and you've owned it for years and there's not been a lot going on that land, and people will tend to try to move in on that land, not necessarily physically, but they'll try to do something to take away from your vested interest in the property. And my job is to protect against that. So some of my best clients has said that the benefit that they get from working with me is the years of experience. I have been doing this since I was in my early 20s. So I've been in this business for over 30 years. Not only have I been blessed to operate in this capacity and service a lot of people in that benefit, but I've also been a licensed realtor. I'm currently a real estate agent, and I'm a land professional. So my job is specializing in land, bringing landowners and land buyers together, helping people to get involved in development, agriculture, bringing together companies, energy companies that are looking for property to lease. And so what I do is I help people monetize their land. If they want to sell it, I help them sell it. I list it at the top price and market it not just to individuals that would be interested in purchasing residential property, but to those companies that are looking to purchase land and pay top dollar for it, and vice versa. So those are some of the things that I've heard from my best customers, that with the information that I provide, it helps them not just in one area, but in a variation of areas. And I am thankful to be able to do that. So we're going to get started. And if you have this book, Homeownership, Pre-Planning, and much, much more, I want you to go ahead and pull that out. Homeownership, Pre-Planning, and much, much more. We're going to go ahead and open up. And what I want to do is I want to talk about specifically some things that are very important to those people who are interested in purchasing real estate. Oh, another thing that I've heard from some of my best clients, just recently I've heard this, is that I have been beneficial in helping people like them in being able to purchase property without the limitations. Okay, so over the years, I've heard people say that they wanted to purchase real estate. They weren't able to purchase the real estate. They were limited because of credit reasons, debt to income ratio issues. Maybe the type of property they wanted to purchase wasn't conducive for the underwriting guidelines of the company that was going to be doing the financing. All types of reasons I've heard. And so what I have done over the years is I've helped a number of companies be able to incorporate. And so when they incorporate, I help a number of individuals form companies and incorporate. Because when they incorporate, they become that entity becomes an entity in and of itself, independently, able to qualify to purchase real estate, normally without limitations. And that's because you can take this entity, you can build it, and you can create everything that's necessary in that company that would qualify it to purchase real estate, if that makes sense. So as an individual, you're limited to the amount of properties that you can purchase. You're limited to the amount of revenue or income that you can produce. But when you create a company, you now build that company. And in places where you're lacking, you can now set that company up so that in those areas where you're lacking, the company is not lacking and benefits in those areas where you come up short. So I'm looking now in the chat to make sure that there are not any questions that are there. And periodically, I'm going to stop to make sure that there are no questions in the comments or no questions in the chat or any, just you can make comments, you can ask questions. I want you to participate, because what happens when we start engaging together, we can cover more ground that way. There may be something that I want to cover in the class that is not necessarily relevant to what it is that you are here for. Your time is valuable. So I want to make sure we're touching those things that are pertinent to you. Okay, but what we're talking about and what I specialize in is helping people to create or to build a corporation that they can use. And I'm going to tell you, it is so easy. We had a young lady on maybe about 4 or 5 weeks ago. She was someone that we helped to build the company back in 2007. She's still operating in that company. And we actually helped her build the company, and we sold her a franchise unit. So we sell franchise units, and you can buy a limited franchise unit or you can buy a full franchise unit in that companies that we've already organized and been operating. You can purchase one of those. We'll help you build it. We train you in it. We get your licensing in it. We walk you all the way through it until you're fully operating. That's one way to do it. Or if you have a business idea that you've been rolling around in your head, but you haven't fully developed it, you don't have to have it fully developed to go ahead and incorporate, because then you create that entity. And now that you have the entity, we can help you build it in such a way that it now qualifies to be able to purchase real estate without the limitations that individuals would normally have. Okay, so if you have this book, Homeownership, Pre-Planning, and much, much more, I wanted to give that basis before we get started. Then I want you to go with me to page 164, page 164. And what you're going to find there are key components to a financial statement. Now, if you can remember, each week that we get together, we talk about various components that are in this book, things that are here to help you. So in the past, just in case you're new to us, in the past, we've talked about things like how to convert your APR rate into your monthly rate so that you understand what your rate of interest is that you're paying per month. So that if you're paying a mortgage loan or you intend to plan for a mortgage loan, you know how to get out in front of the interest by paying the interest. So what's the benefit of prepaying interest, mortgage interest? Okay, well, firstly, it accrues in the arrears. So if you're prepaying it, you're getting in front of it, which is going to reduce the amount of interest that you'll be paying, thus increasing the amount of your payment that will be applied towards your principal. These are things that sometimes you plan for before you even get into the mortgage. But let's say you already have a mortgage and you're interested in paying it off sooner and you want to pay as little interest as possible. We teach you the entire formula in the beginning of the book as to how to break down your APR to now ascertain what your monthly rate of interest is. Then you take that monthly rate of interest and you can prepay it. And the book talks about the optimal time to prepay that interest so that you can reduce the amount of interest that's required or that's due because you're paying it in advance of the interest that's accruing in the arrears on mortgage loan. I hope you're with me on that. So that reduces the amount of interest that's going to be coming due on the next payment, which will increase the amount of money that you're applying to the principal. So we've talked about that in some of our previous sessions. And then we've also talked about qualifying versus non-qualifying mortgages. And we've identified that non-qualifying mortgages are mortgages that are more apt to have flexible underwriting guidelines that make it suitable for businesses and individuals who operate businesses to qualify for non-traditional lending criteria. Now, are we talking about predatory lending? No, we are not. We're not talking about predatory lending. We're talking about comparable rates, but just qualifying guidelines that are more conducive for business owners. Now, I hope you're getting the picture. See, this homeownership, pre-planning, and much, much more, it's purchasing power for business owners. So you say, well, I don't own a business. Well, you can form one. And you say, well, why would I want to form a business? I don't want to do this. I don't want to do that. What you're doing is creating another person. So I don't know if y'all are familiar with George Foreman. George Foreman had several children. Several of them were sons. And does anybody remember a very important factor about all of the sons of George Foreman? Yeah, he named every one of his children George Foreman. Later on, he revealed that the reason why he did that is because things were different back then than what they are now. We didn't have artificial intelligence. We didn't have the computer systems that could pick up on things very swiftly. And so the truth is, George kept recreating himself over and over and over again until he found a formula that would work. Now, today, you can't do that. Today, you've got some guidelines, some rules, some laws that would prohibit you from doing that. But then he could recreate himself over and over again until he got a model that would work in terms of qualifying, in terms of purchasing power. Okay, well, when you create a corporation, you just created another entity that you can now build to be everything that you're not, to put you in a position to be able to purchase the real estate you want to purchase. Why is it important right now? Because we're moving into some interesting times. And so you may already own your home, but let's say your home is in a subdivision where there's homeownership or homeowner association, and they prohibit you from growing a garden. They prohibit you from certain things that you need to do to prepare yourself for the future. Well, if there's an onslaught of financial constraints that may be coming on, I'm not saying that it is or that it isn't. I'm not giving a forecast. What I'm saying is that owning your own land that's maybe separate from or outside of the home that your primary home that's maybe in a homeowners association or delegated under a homeowners association, you can now use that land to lease it to produce some type of non-performance income that's coming in. You can use it for agricultural purposes. You can use it to form an agricultural community. All of these things are things that we've talked about here on this platform, ways to benefit you in terms of getting past the hurdles and the walls that sometimes hinder you from being able to increase. Well, I'm a land professional. I specialize in helping people not just purchase land, but for those who want to monetize their land or for those who want to sell their land. That's what I specialize in. What's the difference? Well, if you're listing your land for sale and you list it in a regular MLS, that MLS specializes predominantly in residential property. Okay. All right. But when you are working with a land professional, we make sure that we deal with platforms that specialize in land. So it may not be in the local MLS, but it will be on land.com, on watchland.com, on all of the platforms that specialize at nationallandrealty.com. They specialize in marketing land. They know everything that there is to know about land, down to the soil, different topographical reports, all of that to help you market your land, to help you increase, to help you maximize in the use of the land that you purchase. Okay. How do we help you get there? Homeownership pre-planning and much, much more. Okay. So now that we've gone through the history of what it is that we do, we're going to get to page 164, key components of a corporation's financial statement. So you've heard some of the things that we talked about before. You've heard me talk about the young lady that was here to help start her business back in 2007. She's still in business, and she uses some of these same key components in this book to help her further increase her company. Since then, we started her in an abstract, a real estate abstracting company. And if you don't know what that is, we'd be more than happy to introduce you to. There's a book that we've written that's called Easy Corporate Curriculum for New Business Owners. That's the first of 3 series. The second series of that book will be franchise ownership. And in that book, we explain to you franchises that we've sold and that we continue to sell. Well, we started her in the real estate abstracting business, and she's still in that business. She added to that business her realtor's licensing in 2 different states. So now she has the title company, she has the abstracting company, she's got her realtor's license in 2 different states. See, you see how you're increasing, how she's ever increasing and modifying her income base with her corporation, and she's buying relatively, quite a bit of real estate with that, all of that we started her with in 2007. She was a guest here maybe about 4 or 5 weeks ago, and she talked about how we were able to benefit her. What I'm sharing with you is information that I am praying will help you in your endeavors. I don't know what your endeavors are, so I'm trying to cover a broad area, which brings me to the financial statement. Okay, so when you go to apply for anything in terms of real estate financing, qualifying mortgage lenders as well as non-qualifying mortgage lenders want to have an idea of your financial viability. Okay, so how do you prove to them that you're financially viable? Well, one of the first things that they're going to ask for, in addition to your corporate documentation, your articles of incorporation and such, they're going to want to know what your financial picture looks like. Okay, and the only way that you can, that they really can tell in terms of a corporation, is that they take a look at your financial statement. So I don't know how many of you are familiar with how you prepare your financial statement, but if you're not familiar with how you prepare your financial statement, this book will make you aware. This book will explain to you a variation of ways that you can prepare that financial statement. And we're going to start today with firstly helping you to understand the various components of that financial statement and why those components are important. Okay. All right. So we're on page 164, homeownership, pre-planning, and much, much more. Let's just assume that we've gotten past everything. You are already a business owner. We have now incorporated you, which takes a brief amount of time. It's very easy to do. And in the other class that I just talked about, Easy Corporate Curriculum for New Business Owners, that's a whole course that we teach. And we have a manual, a book that goes along with that course. In that course, we teach you how to build a company. We teach you how to get clients for your company. We teach you how to set up vendor relationships, how to set up your general ledger, how to prepare your financial statements, how to qualify to purchase different big ticket items, specifically real estate, because I am a licensed real estate agent. But we teach you all of those components in that class. And then the next class teaches you how to franchise the company that you have now built. this entity that you have now built. Okay. All right. So the very first component of a financial statement, and remember, this financial statement tells a lender the financial condition of your company. It talks about whether or not you're financially viable. And the very first component is the income statement. So, see, the income statement shows the financial performance of the company over a period of time. And in the class that we teach, Easy Corporate Comprehensive Curriculum for New Business Owners, I call it ECCC for new business owners. In that class and in the book, there's a sample financial statement that we provide in the class. And so it's a template, and we help you walk through as we help you form your corporation. We help you walk through learning how to prepare your financial statement. Well, you say, well, I can just get an accountant to do that. You can. You can definitely do that. I don't know if you guys remember this, but there's a guy named Bernie Madoff, and he started out, a legitimate business initially. And then he, things happened and he hit some bumps in the road. And he decided to defraud people. It wasn't his intention when he started. So he was stealing stock in various ways. And really all he was doing was like a Ponzi scheme, because as people invested, he would take that money to be able to pay, to issue dividends and payouts to others who had already been a part of that particular scheme. They didn't know it was a scheme. Okay. They just thought it was a fund, a hedge fund. And so he had accountants that would send out reconciliation to the stockholders, the members of the hedge fund. And so they weren't really reading those reports from the accountant, because if they had really gone through it, they would have seen the layers of fraud, and the holes that were there in terms of reconciliation and accountability. So one of the reasons why, and that I've heard some of my best clients say to me that they appreciate the courses that I teach, specifically the ECCC for new business owners, that's Easy Corporate Curriculum for New Business Owners, is because in there we give a detailed synopsis in that course of how to prepare and understand all the components of a financial statement, because it determines or depicts to someone that you're showing it to your financial viability. Okay. You want to know how to do it, because even if you're going to take all of your information to your accounting company, you still want to make sure that they're preparing your financial statement in the best light, not just in a standard form, but utilizing all the mechanisms that will place your company in the best light. You also want to be able to, when you go to the lender, I used to work for a bank years ago, Citizens, and people would come in with Citizens Mortgage, and people would come into the office, and there would be businesses, and they would, I would ask for their articles of incorporation or the articles of an organization if they were LLC. And then we go start going through the financial statements. And I take a look at, the equity, the owner's equity. And as I would look at the stockholders' equity, I would start asking questions, and they would say to me, as if they was pointing to another individual back here, oh, my accountant, my bookkeeper, they know this, they understand this. Yeah, but why don't you understand all the financial mechanisms, working parts of your own company? It's important that you understand it, because then you carry a certain amount of confidence in your company's credibility and financial viability. Even if your company first quarter hadn't made very much money at all, you understand the amount of stockholders' equity that's in your company, whether you've made income or not. And it gives you a certain confidence as to the quality and value of your company. You want to know how to read the financial statement, how to prepare it, how to oversee somebody that's going to be preparing it for you. And then if you have to get an audited financial statement, that's a company, a CPA coming in and now verifying everything that's in your financial statement and actually giving credence to it by signing off on it. But you still want to make sure that they're conducting their audit properly. You can't do that if you don't know how to read it. If you don't know how to read the financial statement, you won't be able to operate proficiently in your company. That's what happens with a lot of people. That's why they don't have the longevity that they could have in their corporations, because they're not understanding their financial viability and how to express it to someone else in writing. So that income statement shows the corporation's financial performance over a specific period of time, a quarter, maybe a business cycle, which would be maybe a year. It talks about all the revenue and expenses that comes in and the profit and loss statement. Okay, so if you want to understand more about the income statement, we can then go to, excuse me, we can then go to page in the same book. And the reason why I want to do it this way is because I want to make sure that you understand every portion. Okay, so we can go to page 105 in the same book, Homeownership, Pre-Planning, and much, much more. Now, what I'm doing is giving you a general idea of the services that we provide, a general idea of how you use this book. And in this session, in these classes that we host on Sundays at 4:30, these are free. We do them so that you understand the gold mine that you have in this book. Because if you look at it initially, it just looks like a bunch of stuff. Okay, so what do I do with this? But what makes it a bestseller is when you understand how to use it for your benefit. Okay. All right, so we're on page 105. And we're looking at the components or the calculation of current assets. So firstly, when we're looking at financial statement, we're looking at the income statement, we're looking at the balance sheet, and the very first part of the balance sheet talks about the assets and the liabilities. Okay, so when we look at the calculations for current assets, which will be on page 105, firstly, we want to understand when we're looking at income that's coming in, revenue that's coming in, what's a current asset? What's a current asset? A current asset is any asset that the company may have that can be liquidated within a business cycle. And so we're assuming that your business cycle is a year. Not all companies, some fireworks companies, they don't operate, they don't have a full 12-month business cycle. So you'll hear me use the term business cycle rather than using the term year, because not everybody's business cycle is the same. Okay. So whatever assets that you have that you can liquidate within your company's business cycle, we're going to use a year in this scenario. If you can liquidate them within 12 months within a business cycle, then that's a current asset. Okay. And that's going to be how you determine. And if you look at page 106, page 106, now we're going to break down some of the definitions. Why are we going through this? Because I'm trying to show you the different moving parts of a financial statement. The financial statement is what is used for a corporation to determine its financial viability. Okay. So you're not looking at credit reports. You're not looking at little bitty small business credit for, we're not looking at, no. You're getting ready to purchase real estate. And when you walk into that bank, when you walk into that lender's office, when you send out your documentation to the non-qualifying mortgage lender, they're going to say, we need your profit and loss, or we need your income statement, or we need your full financial statement. That's the first thing they're going to look for. It's nice if you can have it audited. An audited financial statement is one that you've either prepared yourself or that you've gotten your accountant to prepare, and then you've taken it to a CPA to have them to go through an audit, meaning that they verify every aspect that you have in here. So if you have assets of real estate or you have assets of equipment listed as current assets, they'll go through and verify that those assets are actually viable, that they actually do exist, and just confirm and give credence to that financial statement that you have. So when you walk into the bank with the audited financial statement, they now know that XYZ CPA firm went through this, did a audited financial statement, put their seal on it, and signed their signature as to the date. That's like gold when you walk into the bank. The very last thing they'll ask about is your company credibility. And if you have that down payment, it's not going to be a whole lot that they're going to ask for in terms of credit, because now you're in a totally different league. And they're going to be looking at everything that has to do with the company's AR, accounts receivables, the amount of business that you're doing. And how about this? If you're buying a rental property, there are actually some loans that you can use as a corporation that they won't even look at your credit. They will look at your financial statement, and then they're going to look at the projected lease amount or the projected income that's going to come from the property that you're buying. And they will qualify you based on the projected income. Because you might say, well, my company has only been in business XYZ number of days, years, months. And we don't have that kind of accounts receivables coming in to substantiate or to support buying a piece of property that's income producing. But how about this? The property may have a history of producing income. Okay. Then what can be done by the lender is they can take an average of the income production for, or even the prospective income that's going to be produced. They can take a look at the projected income, that's going to be produced. Take an average of that and then qualify you to purchase it based on the projected income that the proposed property that you want to purchase is going to produce. You see how you're in another world, a whole nother ball game when you create a corporation, an entity. You set that entity up so that now it can meet all of the qualifications that maybe you couldn't to purchase an unlimited amount of real estate. You may only want to purchase land. You may only want to purchase a warehouse. You may want to purchase a home with a certain amount of land on it that you can use to now cultivate, build on, increase. The benefits are endless. All right. So when we talk about the definition of current assets, we've already talked about this. Those are assets that can be converted into cash within the business cycle, specifically or normally or usually a year, but that's not always the case. Okay, so one of the key components to determine whether or not it's a current asset is firstly, can it be converted into currency, into liquid cash within a certain amount of time? Okay, cash is also a current asset. Bank balances, those are already converted into cash. Accounts receivable, AR, which we just talked about. Money that other companies owe you, money that clients owe you, money is that's due for services that have already been rendered and delivered, or even prospective contracts that you've already entered into. Deposits have been paid, and there are certain balances on the book, and that can be counted as well. Any inventory that you may have, raw materials, any goods that you're working with. Okay, so all of that's considered a part of current assets. Then if you want to look at non-current assets, those are going to be assets that you have that can't be liquidated within a 12-month period of time, but they are considered assets. Okay? Okay. So, and then you get into breaking down how you put all those together in the financial statement. And that's what that class teaches. Easy corporate, comprehensive curriculum for new business owners. And we say new business owners, but I know some people who have been in business for years, and we've helped them. They've owned a sole proprietorship for years, but they never incorporated it. And so we help them to incorporate their company. And now they can take all of their assets and they can put it all together and bring it forward and now incorporate it into the company that they made an entity, a viable entity. And now we can present that in the form of their financial statement because they are now considered an entity that can be measured. So they were doing well as a sole proprietorship, problem is that everything that they made, everything that they did, all of their assets was counted as their own personal. It wasn't separate. Certain partnerships, they're not separate. And even certain forms of LLC, while they have certain corporate benefits as to the assets and liabilities being separate from their own personal, but when you get ready to do the taxes, all of that information passes through the individual's own personal taxes. It does not stand as a separate entity. Also, when you're dealing with a C corporation, you can actually sell stock. You can establish your stock when you set up your corporation, and you can determine whether you want preferred or common stock. And show you how to set all that up. We show you the difference between the two, the benefits between the two. Whether you want to start with a certain amount of shares, if you want the share to be par or non-par in terms of value, we explain to you step by step, morsel by morsel, what all of that means to you and how it can benefit you in your future growth. Okay, and so with a C corporation, whenever your company needs to raise capital, you now have an asset in your company's stock. So your company may not have produced anything all year, but you may have some companies that buy smaller companies. So huge entities that buy smaller companies. And my husband and I had that happen to us a long time ago. We had just started our company. It was called Battle Lawson and Associates. I was in my early 20s. I want to say I was like 22 or 23 years old. It was a pretty popular company at the time. And so what happened was a big fish came and swallowed us up. They came over and they wanted us to merge with another company that they were about to buy in Buena Vista, Georgia. So they put all three of those companies together and they formed an entity called Money Express. But in order to bring us on board, they had to buy our company. They had to buy our company. They had to liquidate all of our debts. And then they had to pay us our shareholders' equity in the company. So not only did they buy the company, not only did they liquidate and pay all of the debts, but they also paid us, our shareholders' equity in the company. And then they paid us to come aboard and merge with, the larger big fish. And then they paid me to help them operate that big fish. It's endless. Okay. I'm just telling you all. I'm trying to give you an understanding in this brief period of time what we have, because a lot of people feel limited. They feel limited because they're fighting against the grain. It's like, oh, my credit score needs to be this amount. Oh my God, something happened. It's not even me. Oh my God, now I gotta fix that. Oh, and then as soon as I get the fix, oh my God, then something happened with my income and it's just a never-ending little treadmill that they're on. Or they buy the house, but now something happens with their income, and now they're subjected to foreclosure because something happened with the income that was due to no fault of their own, and they don't have a viable way to raise capital. Well, you can raise capital when you own a corporation because you have stock, and your stock always has value because it's based on public marketable perception. And larger companies want to buy smaller companies that are existing, especially if they have longevity. Some companies want to, foreign companies, that's a whole nother thing. I hope I can say this on here. If I can't, I'm sure somebody will check. There are foreign companies who want to get into the game. They'll buy your company because you have formed it years ago. You may not even be operating on a large scale, but they want that company because it's already established and it's been in business for a viable amount of time. I'm going to use that. And so what happens is they come in and they make you an offer to purchase it. We also had that to happen to us. We were in Thomasville, Alabama. But I digress. So more components of the financial statement. I'm just skipping around to show you the importance of this book, how to use it, the information that's in here, and how you apply it to what's going to be relative to what you want. Okay, so we're going to go to all the way over to page 157. Now, this session is not long enough for me to get into enough in-depth information to give you a clear picture from A to Z. So I'm trying to share all of this information so that you understand the diversity of what it is that we offer, the variation of what it is that we offer, so that you can find something in it that you can use to help you. Page 157. We're in homeownership, pre-planning, and much, much more. So as we talked about the different mechanisms, the different key components of a financial statement, we talked about why it's important. We mentioned the income statement and how it has all the variations of income that your company has coming in. We look at this income statement on page 157. Okay, and again, the income statement is also known as the profit and loss statement, and it shows all of the company's financial performance. It shows the income, it shows the expenses. So it shows the total revenue that comes in. Then it shows the cost of goods sold. We also teach you about the acronyms because sometimes you'll look and you'll see acronyms on financial statements and you won't be familiar with them. So in this book, we use the most popular acronyms so that you're aware of what they're used for. Okay. So any cost that's involved with you producing the goods that you sell, that's going to be cost of goods sold. So we owned an abstracting company. You go into the court house, into the records room. If you enjoy this, clerk of superior court, if it's in Alabama, it's just the probate office. In some states, it's the circuit clerk's or office, but you go in there where the mortgage and deeds are chronologized. They're in records and index books. And we research the history of property to make sure that there are no easements or encroachments that's on that property, that someone hasn't tried to steal a portion of the interest of that property by maybe conveying off a small portion so that the person's not even aware of it. We check to make sure nobody's borrowed against their property or verify the history of the property, the ownership of the property over a variation of years to make sure all of the interest was conveyed to them properly, okay? But it cost us. And the cost to produce that product, that report, that title report that we issue, is the cost of copies in the records room, okay? So that would be considered the cost of goods sold. The product is the title report. The product is the title commitment and the title insurance policy. The cost is the cost of the copies that we incur in order to produce that report. The cost of goods sold. What is the cost that you incur that's attributed to you producing that particular product? Okay. And then we look at the gross revenue that's coming from the company. We take that gross revenue and we subtract or deduct that cost of goods, the cost that it took to produce the goods that you sell. Okay. All right. Then you look at operating expenses. I'm giving you a general idea of the breakdown of that income statement. So any cost that's required to run the business, such as salaries or lease on the building, or even operational costs like utilities. All of those things are expenses. So what you're going to do is you're going to then subtract from the gross profit amount the amount of your operating expense. And then when you get down to your net income, what happens is you subtract any other cost that's involved, any other expenses like taxes or interest. You deduct that, and that gives you your net income. Okay. So when you're working out the financial statement, again, one of the key components we talked about was the income statement. And then the balance sheet is also a key component. And in that balance sheet are those things that we talked about prior to. And it gives an idea of what the company's financial position is. So you're looking at assets like current and non-current assets. You're looking at liabilities. And of course, if a current asset is an asset that can be liquidated within your company's current business cycle, and a non-current asset is one that cannot be liquidated within that amount of time and converted to cash, then a current liability would be a liability that can be paid within a company's business cycle. A non-current liability would be a 30-year note. That's a non-current liability because you can't liquidate that. You can't pay that off within a company's business cycle. So I'm hoping that that makes sense to you. And all of those components, those current assets, non-current assets, current liabilities, non-current liabilities, all of those are included in the company's balance sheet. So we talked about the income statement. Now we're talking about another key component, which is the balance statement of the financial statement. And so what that explains to you is the financial position of the company at any specific point in time in which you're operating. You can take a quick snapshot based on what your current liabilities are, current assets are, just for that time frame, maybe for that quarter, maybe for that month, or for Q2, or whatever time frame you're in the year. You can pull all of that information out, including the shareholders' equity, and present a snapshot on the balance sheet as to your financial condition. Okay. Another key component is the statement of cash. Yeah, the statement of cash. It's like the amount of cash that you have flowing through the company in terms of income that you have flowing in, and then money that you have to pay out for operating, for investing, for financing different activities and projects. Again, within a specific period of time. You pick a particular quarter or a particular month or a particular week, and you can specify on that statement of cash. It depends on when you're dealing with the lender. It could be the very first month of the year. So they may just want to see your financial statements from last year, and they may want to see your statement of cash flows and your balance sheet from this first month or first week or the first quarter so far, year to date. I'm hoping that you're getting an idea. I'm checking. I failed. If anybody had any questions. I think we're okay. Open this up. Make sure to roll on. Sorry about that. I'm checking everywhere. I was checking the Facebook. And let me check the people that are right here with me. I want to say thank you to everybody that showed up in the Zoom. I'm very grateful to you. I got a Zoom going on here and a Zoom going on there. I got two different Zooms going on. And so the people who are in monetize your land, they're in a separate Zoom, and I'm looking at both of you all at the same time. So I got Zoom going on, and I got the Facebook Live going on. So forgive me if I'm missing any hands. You guys can text me too. I can see it on my watch. You can text me, and I can cover whatever it is. If I'm missing something, speak up, or you can unmute and just start talking. That's fine. Um, we're in small enough number that we can do that and not create havoc. I'm about to be ending in about 10 minutes. So if I have not thus far covered some of the questions that you have, please, 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 if you're in the chat, raise your hand, ask a question, put the question in, and you don't even have to raise your hand. Put the question in the chat, unmute yourself, because it should be set up to where you can unmute and talk. Unmute yourself. Say what it is that you need to say, even if you just have a comment. Let's get some dialogue going. If you're in either one of the Zoom, and if you're, again, on the Facebook Live and I haven't covered what it is that you want, reach out to me. You can DM me. You can put a question in the comment. For those of you who have my number, because I try to make my phone number available, everything, text me and I can see it on my phone. Or if this is beneficial to you, because my whole purpose for doing this is to benefit. You ever been in something and the person went on and on and on and they didn't touch anything that you needed and you felt like you just lost, $100, $200 worth of time? I'm not going to be that person. How do you get funding for startup real estate investment? I'm glad you asked. Oh, see, that's what I'm talking about. Okay. So one way that you can do that is you want to make sure. So is your startup a corporation? Is it a corporation? It's going to be important as to how the answer will vary. That's why I'm asking. LLC. Okay, that's a little different than the answer that I was about to give. I was going to say if it's a C corporation, then from the stock that you have set up, we can show you how to sell stocks. We specialize in helping corporations. So LLC is a corporation. Yes, it is. The issue is that your taxes are passing through your own personal taxes. So you're not set up to sell stock because the quickest way to sell to create quick capital and revenue funding is to be able to sell stock. And it's easy to convert. I mean, you set up as an LLC because you want to be an LLC. But that's the quickest way to do it as a C corporation. You can sell stock, and you're not selling stock to mom and pop. All you got to do is we show you publications of how you can publicize your company and then initially let them know that stock is available to be sold. We show you how to put your portfolio together to sell it. But now, as an LLC, you can also raise capital in the same way. We have a list of companies in the course, the Easy Corporate Comprehensive Curriculum for New Business Owners. And those companies also seek out LLC. They're investors, and they seek out companies that are formed under the auspices of a LLC, orchestrated with articles of organization. And what they ask for is your articles of operation or organization. They ask for your financial statements. They ask for, whatever area that you're incorporated in, whatever state that you're involved in, because a lot of them want to fund in particular states. We have a list of those companies that we give you as you take that course. And those companies are investors. They provide funding. They have grants. They have opportunities that are available specific. And sometimes you don't have to be a specific type of business, but they want to get involved in investing in smaller companies. Sometimes they're larger companies, and you'd be surprised they have grants for smaller companies that are doing the same thing that they're doing. But they want to get a vested interest in that company. And a lot of times, if you're a corporation, a C corporation, they'll get you the funding in exchange for a small portion. I'm not talking about like that program that comes on television when they ask for so much of your company. No, no, we're not talking about that. We're talking about 1%, or they'll ask for a certain amount of dividends over a certain period of time, small percentage, and that's after you come into profit. So to answer your question, in the course that we teach, we have a list of companies that invest in smaller companies of the same type or variations. We show you how to build your portfolio to present it to them to get that funding. Did that answer your question? Because that was a lot of words. I just realized I did a lot. And it might not have been necessary. Did that answer your question? Okay. Happy. Keep them coming if you got anything else. And I'm hoping that that answered the question for other people who are watching too, because otherwise, why we're here if I'm not benefiting? Because that's what I want to do. People have benefited me over the years, and I want to be that same type of benefit to others. I had someone to teach me when I was, well, okay, the company that came and bought us, that big fish that came and bought our company, there was the CEO of that company. And that man taught me for 12 years. He taught me step by step, specifically, class after class, over and over and over. And then he sent me to, which is now known as Columbus State, but it was Columbus College at the time, to take courses that would give me certification in those same areas that he was teaching me. And later on, he helped me to get licensing in certain areas to now back up what he had taught me and the certification that I got, which landed me that job at the bank back then. Um, and it helped me to be a loan officer. At that time, you didn't need licensing to be a loan officer, but you did need certain certification. You needed a certain amount of hours. Well, he taught me for all those 12 years. And then after he taught me, we began different companies that we were able to start back in 1991, 1993. We still have those companies, a couple of them. We were blessed by larger companies. They came in and they invested a certain amount and they took a certain amount of interest in the company, but we still own the major part of those companies. Let me tell you. So I want to pass it on because as I benefit others, God is always sending somebody to benefit me. And I'm sorry if I offended people by speaking of the Most High, But I really believe in reciprocating. I believe in the law of reciprocity because it has worked for me. And this is why I offer this. Okay, so if there are no other questions, I'm going to sum this up by going to the final key component of your financial statement. And I'm talking about this because if you're going to get startup funding, if you're going to get grants, if you're going to go into a non-qualifying lender to purchase real estate, you're going to want to understand all of the components of the financial statement because the financial statement is what they're going to be asking for. It's what they're going to need to determine your financial capability, the financial capability of your company, of your LLC, or of your C Corp. That final component is the statement of changes in equity. So we talked a little bit about stockholders' equity. We didn't get a chance to talk a whole lot about the stockholders' equity, but I want you to understand that your stockholders' equity is very valuable. I have seen people not have a dime to their name and almost be bankrupt, but because they had stockholders' equity in their company, it spoke to the financial strength of them personally and of the company. And that was one of the things that they used to raise capital. So as we look at the statement of changes in equity, it talks about the shareholders' equity and if there are any changes that have been made over a period of time. That should tell you how important it is because you want to list on your financial statement any variations in the stockholders' equity. If there are any profits that were retained in the business. So you might have stockholders' equity, but you didn't take any of your dividends. And so you let them ride on the company's financial sheet and pass through over into the next year. So the company got a chance to retain your profits that should have come to you as a stockholder, or dividends that may have been paid throughout the year or throughout whatever period of time may be in review. Any additional stock that was issued that then increases the marketability of the company. So you can do a whole lot with raising capital just with your stock, just manipulating your stock. And some entities, some organizations, sole proprietorships, partnerships, LLCs, they don't necessarily have stock that can be issued and that can be exchanged. But when you get to a C corporation, you have stock that you can utilize to leverage your finances and your financial portfolio. And the final component of that financial statement is the statement of changes in equity. So we got the income statement, we got the balance sheet, we have the statement of cash flow, and the statement of changes in equity. 4 key components of your financial statement. And that financial statement, now we go into details. If you look at pages 103 all the way up to 164, it tells you the different ways to then prepare each part that we've talked about. We've got equations in there. We've got formulas to show you exactly how to prepare it. If you take the class, ECCC for new business owners, I just abbreviated. Easy Corporate Comprehensive Curriculum for New Business Owners. If you take that course, then you automatically get the sample financial statement. You get, if you think this is in depth in here from page 103 to page 164 as to how to prepare each part of that financial statement, then you really got to take this class because it shows you step by step the different equations, the different variations of how to prepare that financial statement. I'm going to stop right here if there are no further questions and just say to you that I am very grateful to everybody that was able to join me this week for homeownership, pre-planning, much, much more. You asked, oh, sorry, can I guide you? Now, the way that I guide you when you're talking about funding for a startup is I do it inside of that Easy Corporate Comprehensive Curriculum for New Business Owners. So it's a class that we offer. We offer the class on a group basis, and on an individual basis. I've got some people that take the class from me on an individual basis. There's nobody there but me and them. We record it and then we send the recording to them so that they can go back because we cover a lot and review the recording. So yes, I can guide you, but I guide you in that class, either on a group basis or on an individual basis, depending on which one you want. If you want the individual basis, then we do those classes for individuals. And in that class, I specifically tailor it, the sessions, to what it is that you want to do. So that when you walk away from that class, we have gotten you what you signed up for the class for, what you enrolled in the class for. In this case, it would be startup for real estate investment. Just remember, there are some deals that we can get with the non-qualifying lenders and the hard money lenders that won't necessarily require you to have a lot of startup cash. You can get property for $5,000. No, I'm not talking about the total price of the property. No. I'm talking about the down payment would only be like $5,000, depending on how we put it together. Your answer is yes, I can guide you. And the way that you get my guidance is you enroll in the Easy Corporate Curriculum, comprehensive curriculum for new business owners. And that would get you my assistance. And if you want me to send you that link, because I now see who I'm talking to, forgive me. Hey, Princess. Well, I hope it's okay. Forgive me if I shouldn't have. And now that I know who you are, I know how to reach you, and I can send you the link for that class if you want me to, so that you can enroll in. Think about it. And I think you have my contact information. Do you have my contact information? Okay, I'll send you the link. As soon as we close out this class, I'll send you the link. Guys, thank you so much for joining me. I've got a class that I start in exactly 2 minutes. And so I'm going to have to log out and start in that next class. I want to tell everybody, thank you so much for joining me. You know what I'm going to say right now, today, yep, this very moment is the best time for you to invest in real estate and use me as your realtor. I'm Jacqueline Battle, National Land Realty. Oh, thanks, everybody.